Are you interested in learning how refinancing a mortgage on your home works? We'll go over this topic and more on this video. So let's go! Hi, my name is Dean Ueda and I'm a real estate investor and realtor in Honolulu, Hawaii. If you own your home, there's a 60% chance that you have a mortgage on that home. Do you know what interest rate you have on that mortgage? Well, you should, because the interest rate environment changes over time and you could be giving away free money to your lender. So how does refinancing a mortgage work? Well, I'm so glad you asked. It's much like the process when you first bought your place. You want to find a lender whom you trust and ask them for current rates and terms, which you then compare to your current loan to see if it makes sense to refinance. Typically, your new loan will replace your old loan, so it's not like you will be carrying two loans. Again, this is typically. Sometimes the results of the comparison is a no-brainer. Other times, you may need to take a deeper dive and also consider what your future plans are for you and that home. Your lender should be able to provide you guidance as well as your CPA. Oh, and stick around until the end of the video to hear two alternatives to refinancing not everyone knows about. Remember what it meant to qualify for your loan? Well, you're going to have to do that again. And just like last time, your lender is going to ask for your credit history and credit score, your timeliness of payments on current loans, your income and employment history, your other debt and related payments, and of course, current home value and the equity of that home. Why would you want to refinance? The most popular reason to refinance is for a lower interest rate and payment. If your credit has gotten better and or the interest rates have gone down, you may be able to reduce your monthly payments and save on interest. Another reason may be to cash out. You can refinance with a larger loan so that you can use those funds for something else like finance a big purchase or pay bills or your child's college tuition. We call this tapping into your lazy equity. Lazy from the mindset that the equity building up in your home isn't working for you to generate income like investment property or a stock portfolio. Cash out refinancing is actually part of a great investment strategy that I've used before, where investors buy properties cash, fix it up, then cash out refinance to get their initial investment back. But I digress. A third reason to refinance would be to change your rate type. Some home buyers start off with an adjustable rate mortgage or an ARM, and they want to move to a fixed rate mortgage. And yet another reason to refinance would be to change the loan term. Loans with shorter terms typically have lower interest rates. As such, you'll be paying off your loan quicker, also paying less interest over the life of the loan. Okay, here are 3 things to consider when refinancing. Number 1, break-even point. When in doubt, have your lender calculate a break-even point for you, whether it be deciding if it makes sense to pay points for a lower rate or roll in closing costs into the loan, or even if you should refinance at all. Take a look at your break-even point to help you decide on your options. In part 2 of this video that comes out the following week, I'll go over more detail on should I refinance my home now. The second thing to consider when refinancing is a home equity line of credit. Have you considered a HELOC? If your new loan amount is manageable, consider refinancing to a home equity line of credit. Remember that a HELOC rate is not fixed. However, interest calculated is on simple interest versus on amortized interest of the 30-year fixed rate loan. HELOCs may also give you more flexibility in working capital or further tapping into your lazy equity I mentioned earlier. We call this tapping into your lazy equity. Number 3, effects of a cash out refinance. Cash out refinancing typically increases your monthly payments, so be careful on why you're tapping into the equity. If someone tells me they're going to use the cash to buy a 1986 Michael Jordan rookie card or a Hermes Birkin bag they otherwise could not afford, I probably wouldn't promote that. And if they're telling me they're going to use it for improvements on their house, that would sound a little bit better to me. If they told me they were going to use the proceeds for an investment opportunity like a business or real estate, that would get me excited and kind of giddy. So that's how refinancing works. Please click on the subscribe button if you got something out of this video. Leave a comment if you have any questions and click on the bell to get reminders of my new videos that come out every Monday. Oh, and for the two alternatives for refinancing, one is for HELOCs, and if your promotional rate of 1% for 1 year is running out, go and ask your lender for a bridge rate that will be better than the rate it's supposed to reset to, but it won't be good as a promotional rate. Remember, the lender doesn't want you to refinance out to another bank. Alternative 2, this one is for fixed rate mortgages. If you are pretty satisfied with your current rate and terms, but want to pay down your loan and also reduce monthly payments, consider recasting your loan. Basically, you pay a few $100s for the recast, you pay down a chunk of your loan, keep the rates and terms, but reduce your monthly payments. Sometimes this is a great alternative to a cash out refinance. Okay, so that's how refinancing works. I hope you liked it. So until next time, peace.